IT stocks have had a euphoric rally over the last few months as bets of interest rate cuts in the US gain strength. The focus now shifts to the sector's December quarter earnings, which begins with the results of Infosys and TCS on January 11. Notwithstanding the cheer at the bourses, the December quarter is expected to have remained weak, in line with previous quarters. Slower deal conversions and continued weakness in discretionary spending by clients is likely to have kept the revenue momentum muted, as per experts.
We expect muted revenue growth for Tier 1 IT services companies and mixed trends for Tier 2 companies in a seasonally soft quarter due to weak macros, job losses, higher deal scrutiny, and decision-making delays. We expect the moderation in deal win TCV after a high base in Q2 FY24. However, the ramp up in earlier won large cost takeout deals from Q2 is expected to aid recovery for H2 and set the tone for FY25.
Those at Kotak Institutional Equities note that deal wins have been disappointing in quarter 3. There was a surprising dip in wins from North America compared to earlier quarters. Moreover, no mega deals were announced compared to 6 wins in quarter 2, which is a point of concern. Higher furlough-led seasonality is also adding to weakness in the reporting quarter. Wage hikes by Infosys, Wipro, and HCL Tech will further weigh on their respective margins, analysts say. As per 4 estimates, Infosys and Wipro are expected to report quarterly revenue decline of 1 to 2.7% in constant currency terms. TCS may report flattish growth. HCL Tech, meanwhile, is expected to be an outlier with likely sequential growth of 4 to 6% on seasonal demand for its product business. The weak macro environment will likely keep both December and March quarters weak. A turnaround, analysts say, can be seen only from quarter 1 of FY25, which depends on the pace of global rate cuts.
The valuation to a certain extent are stretched, but we like certain pockets where we believe that, there might be some earnings improvement. So considering Infosys, which has a high discretionary exposure, so if the macro improves, their earnings will improve, so will be there. Q3 and Q4 are anyways weak. Q1 and Q2 are good quarters for IT companies. So it all depends upon how fast the macro improves. So if it improves really quickly, then Q1 onwards, one should see positive momentum.
As regards things to watch out, guidance for March quarter and commentary on revenue leakage from discretionary spending cuts will decide if Street's optimism for a quick recovery in 2024 would materialize or not. Today, on January 9, stock-specific action and global cues will guide Dalal Street's trends.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.